Living in the 2020s often feels like the future described in the science fiction of the 1990s, and the pace of change keeps accelerating. Recognizing there are opportunities to invest is easy, but working out where to invest is more complex. I'm joined today by Global X Senior Investment Strategist Billy Leung to talk about some of the areas of change attracting interest and how to avoid the hype around them. Welcome, Billy. Thanks for joining us.
Thanks for having me.
Let's start with the question of how can investors know when to get on board with a new development and how can they avoid the hype that often arises around new ideas and new technology?
Yeah, we get that question a lot. I think in terms of dealing with hypes and whether or not it's what we call a long-term structural trend, I think there's a few things that we should look at in terms of maybe signals. I think definitely, we need to look for a market where there's definitely real revenue forming. And this is not just say, there's sales coming in, but a really strong business model, like a recurring revenue model that we see as sustainable. I think that's something really interesting to see. And the second thing we need to look at is more about the capital expenditure, the capex, so to speak. Is the actual investment shifting from more speculative to actual operational? And I think a good case study or a good, reference point is if you look at the current spending in AI, in data center, you're actually seeing this actually go into strong infrastructure. So I think, the key things definitely to look at is revenue model, whether or not the investments are going into more operational model. But I think one thing to look at is what we've seen in terms of hype is a lot of single stock names. So when you see one stock or one company that's creating all the hype, that's something what we call a red flag. But rather, if you actually see the whole supply chain or the whole value chain being being looked at, I think that's when we see this really being becoming a strong structural trend. And again, a good example of this is when we saw the innovation during the 3G network, where a whole range of networking equipment and also infrastructure was benefiting. And just likewise, we're seeing AI benefiting from not just the software companies, but also hardware companies. So it's really important to look at the entire value chain. And we are seeing a lot of these different themes developing right now.
Now, I know value chains are a big thing in many industries, many of these future industries, I guess we could talk about. And electric vehicles has been one of those. We've seen them go from an idea of you mentioned one big name, and they become mass market. So they've become a really mainstream, practical, real world outcome. So, in thinking about investing in that sector, how do people approach that, and how do people look at that instead of saying I should invest in a particular EV manufacturer? How do they invest in the EV value chain?
Yeah, and I think that's another good case study to look at because if you recall, probably about 10 years ago, over 10 years ago, EV was considered a hype. EV was considered a speculative investment, and no one really saw where we are heading right now. And I think this is, something that we probably observed as well in the past decade. And to answer your question, when you look at EVs, even at the start, when we saw Tesla coming up with its prototype, it was considered that that was the only play in terms of EVs. But along that line, we actually saw a lot of the beneficiaries already happening. So at that time, we saw Tesla working with lithium miners to secure these resources as well. We also saw development and also investment in a lot of the battery makers during that time. Anything from China to Korean players, we saw that coming in as well. And more importantly, is that one thing we also saw during the past 10 years is that, semiconductors was also a big part of the EV value chain. So it's really important to understand that when you look at something like EVs and you just think, oh, it's probably the manufacturers of the car that is benefiting, it's actually the entire value chain. And again, this spans from the lithium miners to the battery makers to the battery developers to the assembly and to even the smart chips that are going into it. And I think one of the key things to really note is that a lot of these thematics or structural changes actually shift as well. We would not have imagined these EVs potentially turning into even autonomous EVs. And I think that's where the improvement comes in. And also where investors need to really consider that, there is a shifting nature even underneath the thematic.
In terms of actually trying to identify that chain, you mentioned battery technology, and I think many of our viewers will be familiar with the concept of battery technology. There's been lots of change going on in that. It's being used to supplement power grids. So, how do investors get their mind around these parts of the chain? Because they may not have visibility. They might just be thinking vehicles on the road. without all the bits that go into making those vehicles.
Yeah, I think that's a quick question, and it's tough, even for myself when you look at the entire value chain where it spans. And I think this is, I guess, a strong nature of a lot of the passive ETFs. A lot of the passive ETFs, especially the thematic ones, which are really coming up right now, is providing a lot of investors with this way to actually engage with strong structural trends. And one good example when we talk about EVs is that Global X has a fund called the Global X Lithium and also Battery Technology Fund with the ticker ACDC. And what this fund is, it tracks an index which is looking exactly for the entire value chain from companies developing the batteries, lithium miners, to even specialty battery manufacturers. And I think this is one way that investors can actually look into it because, honestly, like I said, this can be a huge market, ranging from different kinds of companies, even spanning different areas from US to Asia to Europe.
Because many of our viewers will probably have an EV parked in their garage, but at this stage, they're unlikely to have a humanoid robot in their house. Even though we're seeing lots of growth and lots of development, that seems to be much further back down the curve in terms of development and application to us in our daily lives. But yet, there's still lots of that pushing ahead, and we're a long way from sort of the robots of the 1990s, which was sort of in factories and places like that, and we're seeing them almost domesticated in terms of thinking about that sector, where are we at with that? And if people are thinking about how do I get in the value chain now, what's some of the things they need to start thinking about?
Yeah, I think with humanoid robotics, I think we are getting to a stage where we could potentially see commercialization or even monetization in the next few years. This is becoming a reality in terms of my view. Some of the key brokers or key analysts out there are forecasting this market could be potentially close to $38 billion. This is a multi-billion dollar industry with a huge addressable market. And I think if you look at near term, we're already seeing companies such as Tesla potentially launching their Optimus robot in the next 12 months. So I would say that, we are seeing humanoid robotics becoming a real theme, becoming something that we should really, I guess, observe in terms of where the beneficiaries are. So to answer your question, I think even with robotics or with humanoid robotics, whether it be a few years away, we are seeing again a long line of value chain. And this includes anything from the optics, the sensories of the robots, the actuators, which allow the humanoid robotics to move, and also even the assembly and also the chips that make the humanoid robotics perform their task. And I think this is something that we're already seeing companies benefit. Any companies from Japan, China, and even some of these Korean companies are seeing increasing demand for their production or their accessories because of a rise in humanoid robotics.
So going back to you mentioned before that that idea around EVs, and there was a bit of a development time. Where are we with humanoid robotics if we were to compare that to the development and growth of EV and the developments of that value chain? Where are we at with humanoid robotics if we could do a comparison?
Yeah, that's a good question. I think if you look at the whole EV, I guess development, it probably took over a decade to actually get to where we are now, with over like 50% of a lot of the sales becoming true EV cars. I think we're probably still very early stages if you look at it from a true commercialization or this kind of scale. I think we're probably about, if you consider this as a 10-year formation of the EV, I'll probably think we are probably 2 years into this. So I think we're still very early stages, but that doesn't mean that I think we shouldn't be investing in this or we shouldn't be looking at the value chain.
Would you recommend people go out and try and pick a winner? We can hindsight is 2020, and many people can look back and say, "Oh, I've only got Apple or an Nvidia or whatever in the past." Um, and we're in a prime spot now to maybe think about who do I pick for the future. Is that a strategy you would recommend? Go out and take a punt on a few of these big names, or how would you approach this?
Yeah, I think this is going back to our first question, this long structural theme, the way we look at it is that there's a whole entire value chain which benefits from the development. And again, looking at one single stock would be a high risk because, this would be, only looking at part of the value chain and, this could actually develop all through the way. So in terms of how we look at it and, what how we see it is that, we need to be exposed to, not just different areas such as chips, sensors or batteries or integrators. We need to look at different countries as well, which is why over here in Global X, we launched the Global X Humanoid Robotics ETF. with the ticker HMND. So what we do here is the HMND ETF tracks an index which looks at the exposure across semiconductor chips, your sensors, your AI development, your batteries, and also I guess your actuators, which I've talked about, which connects the different parts of the robots. So again, this limits the single stock risk to a lot of the investors, provides that huge value chain exposure to this development, and more importantly, this is a global fund, which means that you're getting exposure not just to US names. Such as Nvidia or Tesla, but you're also getting names such as in China, also in Japan, and even in Korea, which has been a very limited I think ways to actually for Australian investors to get exposed.
We're seeing a resurgence in space flight and exploration as a new technology frontier. And in this case, it's no longer being led by governments who traditionally have sort of dominated that space, but it's the private sector who are making it a prime area for investor interest. Once again, there's a value chain here. Once again, there's some big names and some big players, and there's some interesting developments going on as we see the commercialization of space. So, thinking about this sector, what are some of the things investors need to think about when they approach it?
Yeah, and I think that's another great example because when we talk about space, people again think that this is just very speculative. This is something that's way off, in the future where we don't really see real materialization. But actually, it's already happening. If you look at the current space economy, so to speak, it's already over billions of dollars, about close to $500 billion. And there is estimates that in the next 10 years, this space economy could reach actually over to close to $2 trillion. So, there is something that's being commercialized right now. And, to let a lot of the investors understand is that in terms of the space economy, this includes anything from rocket launches, from rocket boosters, from companies developing the systems that go on top. But more importantly, there's actual true revenue models. A lot of these companies, even such as Planet Labs, which is a very good example, they're providing satellites in the orbit right now, which provides imagery, which provides connection to a lot of people on Earth right now. So, this is actually a new revenue model that is actually making money, and some of these companies are actually profitable right now. So,
What can we expect with that, and sort of what does the future look like for the commercialization of space in terms of all the technology that's going to be used, the hardware that's going to be put up into there, and what does that mean for investors?
yeah, I think one thing to really note is that, we see this as a strong theme right now because we've seen this inflection point where the cost of actually sending spaceships or spending rockets up is actually come down to a reasonable level. So, to put this into context, previously, maybe about, I guess, 10 years ago, the cost of sending a shuttle up costed around 65,000 or 60 to $70,000 per kilogram. And right now, the cost of actually sending rockets up is about $200 per kilogram. So the cost of actually sending rockets and satellites to space or to orbit is actually quite low right now, or much lower, and it's becoming a point where it's actually commercialized and actually very economical to have models. And to answer your question, the applications we are seeing now ranges anything from your classic GPS. There's a lot of services which provide Earth observation. A lot of the broadband network is now based on sending satellites up, along with defense intelligence, which I've mentioned. One thing that is being provided to a lot of governments and even smaller areas is climate monitoring. All of these are subsectors which are actually strong revenue model, which I've talked about. They're actually some of them are very profitable, and this is providing an entire, I guess, value chain of this space economy. Which again is very investable.
Now, I mentioned at the outset that we're living in the future in very much in a real sense, and there's plenty of opportunities to invest. For people watching this, what mindset should they take away, given that the pace of change is just going to accelerate and continue to move faster?
Yeah, I think it's really important for investors to understand that a lot of the, I guess, the products and the ETF that we've discussed, these might sound very speculative. This might sound very out of the world, but if you consider again that EV example that we said, these are things that have been making a lot of value or creating a lot of value in the past 10, 20 years. So I think it's really important for investors to understand that, yes, it's always good to have your, core marquee indices exposure in terms of your portfolio, but it's also important to have that growth or thematic a sleeve in your portfolio. And interestingly, if you look at just 2026 alone, some of the top performing funds or top performing thematics, the top performing funds are actually thematic funds. These are no longer considered, very speculative, very, I guess, innovation should not be considered as something that's, very high risk. Right now, it's something that should form core part of investors' portfolio because this is exactly where a lot of the value is being created, a lot of the growth is coming from, and is actually being supported by regulatories and also governments elsewhere as well. So I think the mindset really needs to shift in terms of looking at thematics. It's no longer just I guess, a sexy part of your portfolio. It's now should be considered as one of the major parts of the portfolio because of this innovation that's happening so fast, because of AI that's supporting this innovation, and just generally because this is where most of the value is going to come in the next few decades.
Now, I know that Global X has a number of thematic based ETFs because you guys cover the whole gamut of the investing universe. So if you're interested in thematic investing, go and check those out on their website. Billy, thanks for joining us today. Really appreciate your time.
Thank you. Thanks for having me, Jason.